Good morning, my name is John Barcello. I'm with Flux Mortgage and Finance, also known as Flux Funding. Flux is a mortgage broker based in Tampa. I'm a loan originator, I'm not a broker. And as I mentioned a few minutes ago, I met April because they were having some challenges getting vacant land financed in the woods. So I worked with another agent, Eric Anderson at Keller Williams, and we got some lovely people from Clearwater that are under contract, and they're in the middle of getting the financing done. Specific to the vacant land program, it's either done as a secondary property, a secondary home, for lack of a better term, or as an investment. It requires 35% down on a purchase. They will do a refinance on the vacant land if you already own it, up to 65% loan to value, so that the number kind of works the same either way. The terms are a minimum of 660 FICO score. They prefer higher than 660, but they will go down to 660 on FICO. It's a 20-year loan amortization. Yes, sir?
Are we talking general land or just nudist community land that has the nudist community in the
general land? As long as it's fee simple. The land must be fee simple. Yep.
Also the land, okay, because I have one that is property on it, cedar on it, but they own the land.
It has a what on it? I didn't
It
understand.
has a casita on it.
A casita, like a tiny house?
Yeah.
Okay, so
Kelly,
it depends. I think there's a 700 square foot minimum on the tiny houses with that lender, but I could double check just to make sure. But I'm pretty sure 700.
700, yeah, they don't, that's more, they don't want it.
Well, no, I mean, if there's improvements affixed to the property, the improvements need to be at least 700 square feet, is what I'm, so if it's a 440 tiny house,
No, it's not, it's bigger than that.
then yeah, 700 is my minimum, and that really applies to a house in Pinellas County, no different than a tiny house up here in
I think
Pasco.
it's 1440.
The actual, the nudist colony or HOA, that's immaterial to the lender. Our lenders could care less. Again, you have the right to do whatever you want with your life, and as long as we're not doing anything illegal, immoral, or imprudent, and not telling anyone, then we're good, right? So they really don't care. It just must be fee simple. These programs also work for manufactured homes, for modular homes. I have a one-time construction closed loan that can be used on these as well if you would like to do a construction loan. And you can convert from this land program into a construction program with the same lender. Yes, sir?
So for a mobile home or a movable house, still just 35% down, even if you don't own the land beneath?
No, you have to own, they're gonna wanna do a land improvement package if you don't own the land already. And the mobile homes and the manufactured homes are very in program, okay? The land specific is a 65% maximum. The mobile homes, that's kind of what I wanted to talk about. Every situation is different, right? What are you buying it for? What is your financial profile? What is your background? How are you gonna utilize the property? All these things tie into what type of loan we could use. We could use a DSCR loan. We could use a one-time construction loan. We could use a straight manufactured home loan. We could go to an agency lender. We could go to a private lender. It just depends on your situation, your financial situation, employment situation, all the various factors that go into it. One of the things that drew me to being a loan originator was years and years of being on the other side of it, right? And dealing with consumers that didn't really understand how many different options there really are and how many different ways there are to skin a cat, so to speak, right? So that's what I try to specialize in. I try to work with many lenders just as a referral source to help in situations where it's a little more challenging than normal or a little more unusual than normal. And that's really all I prepared for you guys this morning. Just short, simple, sweet, to the point. Again, my name is John Barcello. My card information is right here. You can scan it, and I am more than happy to take any questions that you guys might have.
Condominium stuff, because that's a really big issue, and in Paradise Lakes, we've always had a hard time getting loans on condos. So I've accomplished them in every single phase there.
Right.
It's still more challenging, so you can explain what is gonna be required for the condo.
Yes.
Trying to buy a condominium.
Yes, condos, non-warrantable condos is what we're talking about, basically. 25% down for primary residence, 35% down for secondary residence. And as long as there is no, existing litigation, then we'll have no issue.
So what
What
happens?
do you mean with existing?
Yeah, what happens, like the terraces, for example?
So if there's existing litigation, the lender is not. If there's an ongoing court case, basically,
Can the seller take responsibility of the litigation and sell it on?
not with my lender. Not to say that doesn't exist, but with the lender I have on the condo program, no.
So can you just go back to the percentages again?
Sure.
Primary is 35% down.
No, 25 for primary and
And secondary home is 35.
35% down, that is correct.
Does this pertain to Caliente too, April?
Yes.
Yeah.
Okay, 'cause
Is there a minimum on square footage?
No. Typically, the condos aren't built to need less than 400. If it's a condo, they'll do a studio condo, right?
Everyone's description of
Yeah.
Yes.
So,
an apartment, a condo,
Yeah.
a vacation rental, you know.
Yeah.
so it's, for the condominium, it's gotta be a fee simple ownership environment, right? So as long as it's a condo, building, fee simple, then we'll be okay. The size requirement is for the single family slash, a mobile home is still considered a single family.
So the 400 square foot rule, you're saying that even with the 25 and 35% down, you can still finance at 400 square feet or
A
less?
condominium,
Yeah, you
a
can.
condominium, yes, not a tiny house on land, a condominium. I can do a 400 square foot condominium.
See,
That is
and
correct.
he's the first person in
Yeah, we
probably
just had some
8 or
failures
10
with that.
years that can do that. That,
Yeah.
because Bay City
Listen,
can do it, so
it-
this is big, huge,
it's-
huge, huge.
25 or 35% down, the rates are gonna be about 9%, okay? I mean, listen, it's the same thing with the land. The land program is 9.865, it's 20-year loan, I can't say that word. 20-year amortization, right? I'll spit that out real fast, right? 20-year base, so your payment's based on a 20-year loan. Very standard in that regard. The condos, look, everybody knows what's going on with condos right now. I have a flyer specific to the condos over there behind that condo listing. You can take a snapshot of that one as well. We
Is the
submit them one by
amortization
one.
20 years?
We just submit them one by one.
Is the amortization 20 years on the 9%, 25 and 35% down non-warrantable condo units?
No, the condos are gonna be a little different. It's gonna be way more FICO driven, how much you're putting down, loan to value.
Is it a 15 and 30 year or 20
30 year.
30.
30 year, yay, that's
30-year
good.
fix.
That's great.
Yeah.
30, they have an interest only option as well.
Interest only as well?
Yeah, probably not I wouldn't
What
personally
rate?
recommend that on a
Wait, wait,
condominium.
wait, it's interest only, you said?
Yeah,
Wow.
Oh, wow, on the
Crazy.
condo?
On what?
Yes. On a condo, interest only
You
condo.
can't do a regular loan?
Yeah, you can do both. You can do
If
either
it's an
or.
interest only.
Interest
Oh,
only
two
almost
options.
feels like you're never paying it back. unless
Well,
you-
I mean, personally, I've used an interest only loan before, but it's at a time when I thought the market was gonna appreciate quickly in my advantage, right? So I'm basically stalling for 2 years, just paying the note, but I'm also my gamble is that my equity is gonna increase at a faster rate than what I'm paying at an interest rate, right? So if I have a 4.9% interest and I can make 10 on my money, the net save, right? I made 5 at the end of the day. So again, it's belief in how you like to invest.
I'm just-
Yes,
John,
sir.
how do you deal with older mobile homes?
So we have a pre-1976 lender. The rate's gonna go up a point. I mean, they are gonna physically inspect,
What do
but
you
I
mean
do
by-
have a lender that will do pre-1976
What do you
mobile
mean by
homes.
point?
I'm sorry?
I know what the point is, but I mean,
Yeah.
it goes up by 1 point, but what is the starting position?
Again, FICO, down payment, location, a lot of those things, but
You have to own the land.
8+. I mean, a good credit loan right now is 6.97%. So go up a point every time you add another complexity is the simple rule of thumb to look at it. So if we're going pre-76 on rural land, we're probably in the 9s now for sure. And then if we add bad FICO to it, now we're probably in the 10s. If we're 620 FICO trying to do all this instead of 720 FICO, 720 FICO brings it right back down, right? So credit score, down payment, location, all these things factored in. There's not just a blanket rule of thumb.
Yeah.
sorry.
private mortgage money on, pre-76 mobile homes?
With land, correct?
Yes.
Correct, yeah, you have to have land.
Yeah.
So it's a house without, it's a
Right.
car
Yeah.
without land, right, it's a car.
Yeah,
I don't do car
exactly.
loans, no car loans, it's gotta
Yeah.
be permanently finished.
What's the interest rate?
Again, FICO, down payment, a lot of that is gonna vary, but no less than 8, more than likely for a pre-76.
Probably 10.
Yeah, probably, good credit, a lot of reserves, means a lot, right? When you go into, listen, in any of the lenders in here, I'll tell you, you're going to a bank and you have $750,000 in reserve, they tend to be a lot more flexible with their terms and the things they're willing to do for you. I mean, it's just, it is, right? I mean,
Versus my $750.
tends to, I'm with you, right? I totally get it. Yes, sir.
Why didn't your kids kick out of the appraisal business? Is this more fun?
So I'm the salesman appraiser, right? I'm the appraiser that does, classes for realtors, and so I started dragging my kids to these things years ago, and that's like Charles Ruttenberg. I've been their training appraiser for, 9 years at the Belcher location in Clearwater. They both graduated from Clearwater High School, went to USF. So when my daughter was about 28, she came to me and she's like, Dad, I'm willing to start doing the events and doing that stuff. So now it's time for me to move on. And appraisal's changing. I don't want to change the subject, but appraisal modernization is here. And like I was telling April this morning, my kids, they don't use cameras and measuring tapes to inspect anymore. Now they have LiDAR technology on their phone, and they walk in the room and they do this. And it does, in real time, it draws a dollhouse, 360 image, it measures, it puts all the windows in place, it puts all the cabinets and appliances in place, it reads the outside of that stove and it knows it's a Samsung or a Frigidaire, it knows every window opening, it knows those are jalousie windows and those are slide open windows, right? So the technology is just so fast and so quick, and I'm 56 years old and I'm not that fast and that quick. So I appreciate your time this morning, everybody, thank you so much.
Before I go on with Jenna, I wanted to explain, we did accomplish one in 1972, a single wide, which I had been told forever, you cannot, it has to be a double wide, can't be single. And you can do singles, correct?
Yep.
So we actually accomplished it in this community before that we had paved roads. We had crushed lime rock, and I was always told, well, if you're responsible for your own roads, you'll never be able to get a loan in here. And the thing about it is persistence for all our realtors and our customers. We have to let our customers know persistence is extremely important. There's gonna be 1 or 2 lenders that don't. And sometimes they wanna try their lender first because it's a friend or whatever. But at the end of the day, we have to rely on people like Jenna and John, because we know we find the lenders that can get it done. And then the buyer, unfortunately, they lose money because they usually have to pay for a second appraisal, et cetera, et cetera. But anyway, so it was a single wide, 1972, it was shocking, but let me tell you, if you are considering buying an older manufactured home, what the criteria was that it had to pass the engineering inspection. So it can't have a tongue on it where you could pull that trailer off the land, okay? So that's got to not be there. And so the whole problem I had with the property that I'm selling, which Sophie's just stepped out, she wound up actually getting the buyer, but there was a beautiful double wide that had been remodeled in Paradise, and the guy spent a lot of money rebuilding the framing and new truss system. He had an engineer design everything. He spent, for probably $300,000 on this place. And he even put stone on the outside because he reinforced the building, and then he added on. And it was gorgeous, but we couldn't get a loan because it was only showing up as this older property, and manufacturers' homes depreciate, not appreciate like concrete block homes do. So from an insurance company standpoint, they only want to insure the property for $150,000, but the manufactured home had over $500,000 in it. That was the one you were thinking about buying.
Yes.
That was a big deal because we couldn't, the problem was with the insurance, not being able to insure it, and he did not take out that tongue. So every realtor, every person here, before you try to get financing on a manufactured home, you need to make sure that that's not existing under the house anymore. And it's got to be structurally tied down. Engineering reports, well, an engineer is not that cheap for the tie down. They want to make sure that hurricane tie downs are done correctly. But that's how we get those loans done, and that's really important.
So did that place sell? Did they take out the ton?
No, they did not. Well, I don't know. Sophia, the one, we were just talking about the one that you wound up selling on Little Megan's Loop. You know, he had underneath it, he had the tongue. Did they take that out? You know, like,
No, they did not.
so it did,
So
and
how did it come about?
they paid cash.
They paid cash.
They didn't get a
Yeah,
mortgage.
just sold, didn't it?
Yeah.
That's all, I sold it,
Yeah.
Did I sell it last year?
Yeah, big friend, yeah. But,
Yes, the mine
but-
was,
but it couldn't get a mortgage, so that was a hard sell, a very hard sell, because they won't mortgage with that. All right,
Must be permanently affixed and all movable items have got to be
and
removed.
it's gotta be insurable too, so if the roof's bad, you're gonna have to negotiate with that seller to get that roof done first, because it has to pass that 4-point inspection, that 4-point inspection. If it doesn't pass the 4-point inspection, you can't insure it, so they're not gonna give you the loan. And if somebody wants 200,000 and it's only gonna appraise it at 80,000, they're not gonna give you they're not gonna give you a $120,000 loan for it. So it's gotta appraise. So Jenna Williams with Emerald Bank, she's gonna speak with you.
Thank you. It's great to be here. So I'm going to go over a little bit of what John went over. He talked about the land loans, and we offer land loans as well. Our land loans are more if you're going to be building in the next like 5 years. So the one that John has, it's a 20-year amortization. It's a fixed rate. I have either a 35-month or a 5-year balloon. It's amortized over 15 years. You only need 25% down, and the rates are in the 7s. So if you're looking to build something in the next couple of years or so, you're looking at at a decent rate with not not a whole lot of money down. And then again, that can be turned into construction loan if you're going to be adding the mobile home or the park model or whatever you're going to be doing. So and that would work in the woods as well. So if you guys have lots there with 25% down, I can do that for the 35 or the 60-month balloon. Amortized over 15 years.
So that's just a vacant lot, not the building side of it, just the vacant lot.
Vacant lot, yeah. And then again, you guys talked about a casino on it. If there's anything on that land, I wouldn't be able to do that. So if there's a casino on it, if it's like a pole barn or something that's that's not really structural, I can do that. But if there's anything else, any kind of other building on it, I wouldn't be able to do that as a land loan. So that's what we're talking about. And then I'm gonna talk about the interest-only loan again that you brought up. We have one, and it's 10 years of interest only, and then a 30-year amortization after that. So if you don't want to make that payment, or you're going to be moving or whatever, you've got that 10 years to pay the interest only, and then at the end of the 10 years, it's going to go into that 30-year note. So it's basically a 40-year mortgage with interest only for the first 10. So sometimes that works out for people. It's definitely not for everybody, but I just wanted to touch on what he was talking about for that.
So in that particular loan, what would the interest rate be on the interest-only loan?
You're looking at around in the 7s now.
7?
Yeah.
Okay, and that's for concrete block homes?
Concrete block, yeah.
And
That would not be for a mobile home.
just concrete block homes?
Yeah.
What's the minimum down on that, on the interest only?
10%.
10% down?
Yeah, 10% down. Yep.
Okay, but this is an existing home, not the vacant land?
No, I switched off the
This
vacant
is,
land.
this is for a home, so like at the Oasis, if you wanna buy a home at
Right.
the Oasis, that beautiful 4-bedroom, 4th-bath home with the pool and the
Right.
speakeasy and the theater at the Oasis, which you can come see on June 14th.
No, it's beautiful.
And that's
It really
gonna be
is
a
beautiful.
blast, by the way.
Yeah.
Yeah, Jeb Bowen's performing, with Mike Bliss for the first 3 hours, and then Kat Valentine was, so really great opportunity, because that community, you can't buy a day pass, so you can't come in and enjoy the place unless you have a friend that'll never get in there.
or
Yeah.
you do massages there.
Yeah, oh, yes, yes.
Thrills are-
Yeah, so that particular home,
One stop.
that's gonna be 10% down, that's all they have to put down is 10%?
10% down, yeah.
Jen,
To
is
the interest only.
Is that only single family home, or is that
Yes.
condo as well?
No, single family
Just
home.
single.
Yeah, for the
For interest
interest
only.
only, yeah. So in something that we just,
And that's not, is that include manufactured, single,
no,
so just a?
just a stick build, like a,
Stick build.
yeah, concrete home, yeah. So we're able to do Caliente now. Again, it's risk-based because of the required membership, the bank looks at it as a risk-based. So we're requiring 40% down, The interest rates are again in the sevens, and a 740 credit score is what we need for that, and 30-year
Can you go
amortization.
over those stats again, please?
Yeah, 40% down, 740 credit score, and 30-year fixed rate, and that's it, Kelly.
30-year
Yeah,
fixed rate.
yeah, and that would be for the condos or the homes, so I know you're building, what we would do is, just a refinance basically, and then pay up whatever you have, so.
Or I will say that, the required membership thing might be, that's like being challenged now.
Well, if you can get rid of that, then I can do a lot better.
Well, it's
can,
being
yeah.
challenged, it's just the number of residents there who decide to get on board with it.
Yeah.
Because it's not, technically, it's not in any of the published rules, it's an unpublished thing. But anyway,
It's not part of the HOA docs or whatever. Really?
So if it's not in the docs,
So why are you having a hard time getting financing?
well, I'm not, I'm just
Well, no,
saying,
but you're white
you
people,
said
what is-
that membership was a requirement, but,
Why we
it's
don't
not,
have
it's not in the, it's not in the,
It's gotta be somewhere, because it
it
is.
might be a percentage of people that are,
No.
aren't living
No,
at the
it's-
time. That could be one of the reasons.
Okay, well, I don't want to bore everybody with all the details, but I was on the doc committee and went through them thoroughly.
Mhm.
There's one caveat, but it could easily be legally challenged. And that is the developer still has, some say over what the HOA does. But again, don't want to get into the details, but, Anyway, so my other question for you real quick, since I got the floor for a second. And don't laugh, because, I have evidence, not with your back, but does your underwriting department have any live human beings?
Absolutely,
Okay,
yes, it's a smaller bank.
okay, I'm amazed at how many don't, but anyway,
Yeah, and I can call the underwriters for the process, any time.
I mean, the bots don't know a lot.
Right.
They just-
But
it's
they're-
just
yeah,
an
and they're
easy-
black and
It's
white.
an easy way out,
Yeah.
everybody uses the same cookie cutter software.
Mhm.
If your bank doesn't, that's a big plus.
Yeah.
Because the bots will never get it
Yeah.
from a consumer standpoint.
Yeah, no, anybody doing these kind of properties is not gonna be a black and white, company, because they're not gonna do them if they are. They're gonna be a Rocket Mortgage. As long as you
Yeah,
have a
exactly,
vanilla loan,
exactly.
then they're gonna do it for you. But if not, you're looking at, John and myself and,
Yeah.
where our companies are willing to go. He has a lot of, other companies he can work with. I'm just working with the mayors, but
Yeah.
they're, they're getting on board with what we're doing here.
Yeah, I'm in touch with April all the time, so that I can tell you developments as they occur
Mhm.
in the membership thing, but it's being, I know at least one party right now is challenging it. So,
Okay.
it's just a matter of if they decide they wanna, haul it up in front of court or not, so we'll see.
So regarding covenants and restrictions, you know a lot about it if you have questions regarding the, single-family homes. Because that's what he, like.
Or the master association.
The master,
I've been
the
through
master.
all of them.
It's-
Yeah,
But the
been through all of
condo,
them.
but like condo related, that you defer that.
Well, not the condo association,
Right.
they have a separate, but anything master association, homes, casitas, villas, and, condos, I got it all.
So you want his number? 'Cause
Yeah.
he's a really good contact, cause Bob Cheney retired, who was a fabulous man we would always go to, right, Sophia?
Yes,
For
absolutely,
questions
but
and
now
answers?
it's Bruce Rubin, Bruce Riley, who is
Yeah,
the
Bruce
president
Riley.
of the condo association right now. And then, Charlotte is on the board too.
Bruce Riley, give me that
Yeah.
contact information after our meeting.
Sure, I
Okay,
have
thank
it,
you,
yeah.
thank you,
He's a really helpful.
thank you.
Okay, and going back to Caliente, the program that I'm working with there, I need to have at least 70% owner occupied. And that's owner, first or second home, so, I can only have 30% as investment, as investment property, so I don't know what the ratios are there at Caliente, but we would have to look at.
Permanent resident?
No, first or second homes,
Oh, that's like 90%.
okay,
Yeah.
yeah, then
At
we find
least.
that.
90%,
For the homes, yeah, for the homes.
Yeah, and there's a 500 square foot minimum for that program, so I don't know if there's anything
No.
Anything
No,
smaller than that.
Nothing.
I know Paradise, we have the 476, you know, the little condo or whatever they're.
Vacation condos.
Vacation condos, yeah.
Well, we do have park models in the original phase of Caliente, the Casita Village. And a lot of people have added on, so we could probably get to that, but if it was under 500, you can't do it, but you can do it 400.
And I'm looking at just the condos and the homes. I'm not looking at the park
park
models.
no park models?
They're not
Okay.
this program.
No park models.
No, just the condos
Okay.
and the homes, yeah.
Got it.
Yeah, so call John.
Villas, also the villas,
Is that the condo, is that?
no, the villas are the ones that go up the street.
It's
with
22 square feet,
two-story with
2,200 square feet.
Oh, yeah, that should be fine.
They call it
And
the
they're
villas.
brick.
Yeah, no, that would be
Yes
fine.
to, yes to villas?
Yeah.
Villas, townhomes.
Yeah, so we talked about the like mobile home financing. I don't know about you, but I cannot do anything in a co-op park. I just sat, you know, and went through that. It was painful. Can you do?
No co-ops,
Okay, okay.
must be fee simple,
Okay.
must be fee simple.
So that excludes Lake Como and
Yeah.
Lake Linda. So those are the two new communities that we can't do. We can't do
Yeah.
Lake Como or Lake Linda.
That's, yeah, the fee simple is the trigger for
Okay.
all my lenders.
And then so the Oasis, we've got great terms for that. You know, like we said, we can do the interest only, which is, you know, a specific buyer that would want that. But yeah, with 5% down, we can finance that all day long.
What is that for?
The Oasis, the program, and then phase 3, which is in Paradise Lakes, I can do that as well. Even the smaller ones, there's no minimum size requirement that Fanning has, and I can do a Fanning loan in the 500 building, which is part of phase 3.
And that would also include the multi-level ones in phase 3 as well.
Right,
You know, the Key West style.
and that's where I live. I live in phase 3, and I
Condos.
was able to get financing, no problem, and I refinanced some people on my street, so we can do that. Secondary market will accept that.
What
We don't
interest
have
rate?
the requirement for.
What interest rate?
Well, I've got 2.25, but yeah, that was 4 years ago. Yeah, right now you're looking at like 6.5.
6.5.
That's a Fannie Mae. I
Fannie-
have somebody in phase 3 that wants to refinance.
Yeah, you can go secondary market in that because there's no ANR requirement, there's no membership requirement whatsoever.
She lives there and she wants to refinance.
Yeah, no, I can do that.
Okay.
Yeah. Too bad I can't get over the 2.25 anymore, but I can do it.
2.9, I heard.
Yeah, there you go. All right, so let's see, what else were we talking about? Anybody have questions on the land loans? No, everyone's good on that. All right. And that's really all I had. The programs I can do phase 3. The terraces, evidently they're getting rid of their ANR requirement, but they do have litigation going on right now. So once they get rid of that litigation, we can do that secondary market financing as well, so that you can get the good rates and pretty easy financing. I know their HOA is up there right now, but we can do that. Oasis, terraces without litigation, and then Caliente with those requirements that I talked about earlier. Other than that, if it's not, a nudist, property, I mean, we've got great first-time home buyer programs, if anybody's looking for a first-time home. Lots of grant money to give out.
Can you get the first time home buyer then, like in this community, this newest community here? Because there's no HOA, so there's no requirement to be a member. We
Right.
don't have HOA rules
No.
that say that.
Yeah, no, I could do that.
So a first time home buyer loan, what amount down would they need?
What you're looking at 3% down, and then there are grants out there that can help you with that. Also, you can do a little bit of seller, where the seller gives back for closing costs. So, I mean, I've done, quoted condo people, where they're looking at like a $200,000 condo, and they were gonna come to the table with like $6,000 of their own money. And that's with a good credit score.
And how much for Pasco County and Hillsborough, up to?
What's that?
First time home buyers, how much how much are they giving for first time home buyers?
Oh, the grant money?
Yes.
4,000.
For Pasco?
Yep.
And how about Hillsborough now?
I don't know Hillsborough because I've been just dealing with
Right.
Pasco.
4,000 is what they're giving?
Yep.
I thought they were
Again-
giving- I thought they were giving more than that.
Yeah, they were.
Oh.
Yeah. Yeah. And they will again, you know, they run out of funds and then they replenish it.
Oh, okay.
So, I mean, you know, check back next week, you know, and we may be able to do that. Plus, Ameris Bank has a $3,000 grant as well that we can combine with that. So you're looking at $7,000 towards basically closing costs and down payment. And then if you get the seller to, you know, to give back 3%, now the buyer's coming up with, you know, not a whole lot, which is nice.
What kind of credit score do they have to have?
720.
720?
That's first time.
3%
And again,
down.
you have the income, I'm sorry, I didn't mention the income, so you have to be in the median range, and that depends on, the different areas that you're in.
What's the income?
It depends on where you're looking at,
Say Pasco.
well, it's different communities, so it's usually around maybe 60,000 for the median, and that's to get the grant from us. Because we're trying to get into the low to median income, housing.
So to get the grant, you have to have at least a $60,000 income a year.
No, that's the maximum,
The maximum.
yeah.
Okay, say, a newcomer to property, they get the grant and that adds up to about $6,000, and if you want to, if the person wants to match that and make it 14,000, can you do that, or
Who wants to match it?
the person that's buying? Like, say, I'm a new buyer,
Mm-hmm,
okay? I've owned houses in the past, but not in the last, say, 30 years.
okay.
So,
And it's 3 years to require is the requirement.
there's a
But
requirement.
you can't have owned a home in the last 3 years.
Oh, okay,
Yeah.
never mind. And you're applying for a grant as a new homeowner,
Mm-hmm,
and then the person like me, that's the new, wants to put $7,000 down, plus get the grant. Can you do that or not?
absolutely, yeah. I mean, your mortgage amount's just gonna be lowered.
Okay.
Yeah, you can do that, absolutely. And that's gonna affect your PMI, it's
And
gonna be
then-
lower as well.
And then my credit score's like 791,
Yeah, that's good.
yeah.
Yeah, we would like you. Take one of my cards when you leave. Does that, anybody have any questions on anything?
Okay, then thank you so very
Yeah,
much.
no, thank you.
So now we're gonna go ahead and have Stephanie speak, and she's gonna speak with her experience from the realtor's perspective on the things that occur that can affect you, that make it very difficult when you're trying to buy a property in this community. So she was able to accomplish a loan at the Fountains, which we've had a hard time with lately. And so, Stephanie, let's tell her.
All right, take the sensitivity. Hello. Okay, so I'm gonna come to you from